Yeah, everyone, welcome back. Today we're looking at Polestar, of course. So Polestar and Candela has officially released their new boat. This is exciting. This thing is powered by Polestar. I know Polestar is not doing too well right now in the stock market. I know Polestar has had a lot of delays with the Polestar 3 SUV. I know the company is going through some difficulties. We were expecting to deliver 80,000 vehicles this year. Polestar is only looking to deliver 60 to 70,000. Last year, the original projections were 65,000. So it's ironic if we only deliver 65,000 this year. It feels as if we're 1 or 2 years behind on our original projections. By this year, Polestar was supposed to be delivering over 100,000 vehicles. But I'd like to remind everyone, this is a marathon. It is not a sprint. It's a long-term play. I'm looking at Polestar for the next 10 years. What could this company accomplish in the next 10 years? They will struggle short-term. They will have a lot of difficulties. So we will be taking a look at the share price because the price have fallen once again. Makes me want to buy just a little bit. By the way, this is not financial advice, but listen, remember to subscribe to our newsletter. There's a link in the description to subscribe to our newsletter. You can check out our website. You can subscribe on the homepage. And of course, remember to subscribe to the YouTube channel. This is where we talk about everything to do with Polestar. So the big news out of Polestar recently is that Polestar and Candela unveil game-changing flying boat. This is incredible. This was announced last year or the year before, I think it was last year, and it was quite exciting. Now, Candela is a Swedish producer of premium grade e-boats, electric boats. Polestar and Candela partnership in a shared collab experience. Both brands have manufactured the Candela C-8 Polestar Edition. The Polestar Edition sounds good. A breathtaking foiling boat that plainly demonstrate luxury electric performance on both dry land and water. Now, the subtle yet striking design of the Candela C-8 Polestar Edition is something to be proud of. The sleek grey exterior is complemented by light grey highlights on the interior, with a specific design seat upholster in marine textile for durability and comfort. When the boat reaches high speed and lifts out of the water, computer-guided hydrofoils come into view, painted in iconic Polestar gold. I like that. I always like the Polestar gold. These foils improve range, makes for a quieter ride, and elevated that experience. So this is an image of that, so you understand what exactly Polestar and Candela has been working on. It's really astonishing. They share a lab. They share workspace. This is not just one of those collaborations where you just slap your name on it. No, this thing is half Polestar, half Candela. I like that. I like that touch. Now, Polestar has been supplying Candela with its charging componentry since 2022 and recently achieved a new milestone in providing the C-8 Polestar Edition with their battery, which offers a superior experience while traveling in a foiling boat. When it comes to hydrofoil electric boats, you can count on Candela. The Scandinavian boat builder has been supplying marinas with their high-performance models for a while now. Recent collaboration with Swedish electric car maker Polestar has produced a new edition of the acclaimed C-8 hydrofoil boat. This is another view of that boat from the aerial perspective. Looks really nice. So it's a flying boat. It flies on water. That's really incredible. Actually makes me curious about this. I can't wait to see some more videos of people actually testing this out. And I'm curious about this business, the market of this business. And we all know boats are not cheap. Boats are not cheap. It's a niche market to say the least, but they're nice. So the Candela C-8 Polestar Edition is driven by the same batteries as the single motor Polestar 2 in standard range. That's delivering a noteworthy range in silent operation. It demonstrates to be an impressive energy source on land. This partnership between Candela and Polestar is not only about supplying power components, the partnership goes much further than that. We both agree on the electrical propel mobility, engineering, and invention should never be limited by creativity. The collaborated efforts by the two companies is apparent through this model, which shows that decisive action towards sustainability can also be the superior decision. Another view of the both from the side view, I think it's really nice. I love those gold, whatever the name is, but really nice addition. Just to give you another idea of what this thing looks like, There's also a shot of the interior. Yes, there's an interior, of course. It's a boat. Yes, it's got them Polestar Scandinavian looking kind of seat. Actually, the seat looks more like a Volvo kind of seat, but it's got that Scandinavian touch, which is really nice. So that's the Candela C-8. So I know you've been waiting on this. It's time to talk about the share price. $3.28. First thing we want to understand is, when was the last time the share price have been this cheap? And to be honest, in the last week and this week, it's been around this price, $3.24 at some of the cheapest price. Really incredible. Which means that the market cap is less than 7 billion. It's 6.2 billion now in market cap. Extremely undervalued, but I always see that as a good thing, because that just means that my return rates will be much, much higher when people start to wake up and realize this is actually a great company to invest in. By the way, not financial advice, it's just my own opinion. So this is what it looks like in the last month. How about the last 6 months? Might I remind you, recently, just before the Q1 results were announced, the share price was actually recovering. It actually creeped above $4 just for a little time, and it gave us a little bit of hope. But once those Q1 results were announced, the share price tanked. It absolutely tanked. And I think to myself, wow, we did not see that one coming. But I think it's fair to say that Polestar share is really starting to find the bottom price. It's been at this price for almost 3 months now, since around March. Since around the end of March, the price have been close to $3.20. So it's been around this price for a while, and I think that's really where we're starting to figure out that that's where the true value of the company is right now. That's where the public market values this company. But people are not going to choose to invest in this company if there's better investment opportunities, like Tesla. People are going to invest in this company when it's too late, just like the market always does. But they also want Polestar to prove themselves. And I guess that's a big question. Do you think Polestar is proving themselves right now? Some people do not think they're doing enough. And I understand that, because based on the annual reports from last year, some people were expecting that the return rates, the margins, the losses will improve by this year. But I got to be honest with you. I don't care about improving those things right now. Yes, I want Polestar to be sustainable and function on the budget that they're set. However, I'm not too worried about the company making money right now. That will come in the next 5 years. We got to get those cars out, all of them, and then we have to raise that selling price. This is a premium brand after all. We have to get all those cars out, then we can focus on selling 250,000 vehicles annually. That's when this company will start making some good returns. And from there on, we can continue to increase the yearly growth rate. But for the next 5 years, it's going to be rocky for Polestar. It's going to be up and down, to be honest. I just hope that Volvo don't ever take this company off the stock market. Please do not. It will make its return. It will close the gap. It will recover, and it's going to recover beautifully. I just hope that Volvo and Geely believe in this company long term. I believe in Volvo long term. So if you trust Volvo, if you believe in Volvo, you can believe in Polestar. So this was an interesting question I wanted to answer, and this was by Dennis Carter. And I quote, "My only concern was after finally having one profitable quarter last year in 2022, I expected PSNY to at least be flat with minimal losses. In 2023 to minimal gains, and as PSNY is not focused on autonomy, Polestar's main advantage was affordability. I believe PSNY should definitely focus on ramping growth." I agree. Ramping growth is the goal. And that's what Tesla did. They were just focused on building as much cars as possible. Then what they did was really clever. How can we build these cars at a lower price, at a cheaper price, and sell them at a greater premium? That's what gives Tesla the advantage. Polestar can do something similar. That's the long-term goal. You have to ramp these production and then focus on minimizing the cost of production. Now, you mentioned last year having one profitable quarter last year. I think I remember looking into that, and I think my analysis were that Polestar might have did that for like PR purposes. Let's be honest, PR purposes are really important, especially to modern brand with social media and public global coverage. It's really important to show at least a little bit of positive results. So I think they might have just moved around the numbers to do that just to look good in the public eyes. I think that's worth a consideration. So I found another question from Tone. Here is the rub on Monument's estimate about shares. Higher rates of production doesn't equal more profit unless the economy of scale are met that lower costs significantly. In fact, Polestar makes each vehicle at a loss, so higher rates of production should equal higher losses. You're correct. You're actually correct on that, but I'll continue reading so I can explain. The rate of production may validate production system, but it produce at a cost level that is competitive. Will this vehicle sell at a price that will yield a profit sooner than later? The Polestar line of EVs are really good. Can they be made for a higher enough margin? There is a future full of high returns. The answer to that is what will encourage a positive stock price. So I understand exactly what you mean. Polestar is selling their cars right now at a loss. And if they continue to ramp production, they will sell at an even greater loss because more vehicles, greater loss. So I get that because they're not really making a profit right now. Polestar will make profit long term. Remember, they're over-the-air updates. Sometimes they ask customers to pay for upgrades to their cars. That's a very profitable thing to do. I've spoken about this before. Polestar build cars that are slower on purpose, but the thing about these cars being slow is that Polestar can upgrade these cars over time and get you to pay for your upgrades. So they will actually make, if you buy a Polestar car and you intend to keep it for 10 years and you're a big Polestar fan or you want more performance, over the course of 10 years, you could end up spending anywhere from 5 to 10 grand extra with the company, if not more, depending on performance upgrades. What happens when this car gets resold to someone else and someone else holds this car for another 10 years? Polestar can continue. This is the thing about having smart cars on wheels, like a Tesla, like a Polestar. They can make money automatically over the course of their lifetime directly back into the brand, which is Tesla or Polestar. That's amazing. So you make a good point. Polestar needs to figure out a way to reduce costs. How can they reduce costs? Well, they can minimize the cost of manufacturing these vehicles. Here's the thing about that. What Tesla figured out is that raising production can automatically lead you into lowering costs of production. Yes, you're making a loss, but if you start to make some progress in terms of return, and your return is say 1,000 per vehicle, well, 100 vehicles, that's 100,000 on profit. 1,000 vehicles, that's 1 million on profit. Quickly can escalate. So 50,000 vehicles, that is $50 million on profit. That's just a random estimate. But my point is that they can easily turn this company profitable, but they need more experience in minimizing the cost of these vehicles. And by building more vehicle, it automatically reduces the cost of manufacturing these vehicles, because that is the goal, to make these vehicles at a reduced cost and to increase the price. I understand what you mean. Raising the production would actually raise the losses if the company doesn't do it correctly. If they do it correctly and they can turn that around into profit, even a small amount of profit can lead to a large amount of profit over a long course of time. So I hope you understand what I'm saying, but great question. But that is it for this video. Thank you for watching, and I'll see you in the next one. Peace.